And that's exactly what the charts and the cycles are showing right now. We've already started this run up. We're getting very close to the stock market topping, to a recession, a pending recession here. And I believe, we're going to see gold, silver, and miners continue to go higher.
Welcome back to the channel. I'm Dave Russell, and we're taking our monthly look at gold and silver charts with Chris Vermeulen of thetechnicaltraders.com. But before we get stuck in, I just want to let you know that this week we're releasing a video which is all about when the right time to buy gold is. So if you don't want to miss that, hit subscribe and hit the notification bell as well, and you'll be notified as soon as we release that. But for now, let's get stuck into the charts. Chris Vermeulen, welcome back to the channel.
Hey, thanks, Dave. Always a pleasure.
Likewise. We are seeing some very interesting moves in gold and silver at the moment, particularly gold. We've had another all-time high in multiple currencies, in all the main currencies. What, from a technical point of view, is behind this breakout, and how sustainable is it?
Yeah, good questions. I mean, we're definitely in a sweet spot for precious metals to come to life, which we can touch on. But if we take a look at the charts and the technicals, there's a couple of interesting things unfolding on the gold chart. So if we were to just zoom into this most recent daily chart of the price action, I like to use Fibonacci. This tells us the power, the momentum of a move, and it tells us this first leg up, and we tie it to the pullback. Gold ended up hitting 100% measured move, which is this green line.
Yeah.
And so right now, based on just the daily chart, the short-term price action, gold has now hit that target. And I wouldn't be surprised if we have a little bit of a pause or pullback, just like we saw over here. This is where gold and the whole space could have a little bit of a pause and pullback. But more or less, I mean, this is a very strong chart pattern. We started a new super cycle in gold in 2019. If we zoom out here to the monthly chart, what's really interesting here is we started the new super cycle in 2019. We had a run up, we had a multi-year consolidation, and now we're starting to see gold run higher. And what's really interesting is I believe we're having a very similar, we had a super cycle start here in about 2002, 2003 for gold. And then we went into kind of a multi-year consolidation. And then we started to see this run up going into 2008 to when the economy started to stall out, when the stock market came to a top. And that's exactly what the charts and the cycles are showing right now. We've already started this run up. We're getting very close to the stock market topping, to a recession, a pending recession here. And I believe, we're going to see gold, silver, and miners continue to go higher. But if we take a look at the big chart pattern here and use Fibonacci extension, we still have quite a bit of upside potential in the gold chart here. I actually have gold running to about $2,660, somewhere in that area. So $2,700 per ounce. And I think we could see this rally continue for another 1, 2, or 3 months, even if the stock market starts to top out and go sideways. And this is what we saw back in 2008. Gold just keeps going higher while the stock market tops, and this is kind of a signature move that we see in the precious metals space. And it's a warning sign that people need to be ready, because there will be a pullback, a correction in the economy, in the stock market, and in precious metals. Gold pulled back about 34% during the bear market. I believe gold is going to get up to 2,700. And then we go through a weakness time, and gold will probably pull back a little bit and take a bit of a correction, which is a good thing, because I believe that pullback will probably be the last opportunity before we go into something huge where gold's, $3,000, $4,000, $5,000. But that's way into the future, several more years. But very exciting times right now for gold, because there's still upside.
So that 2,600 target, then you're saying that's potential over the next couple of months in this particular part of the bull run.
Yeah.
Right.
That could happen in the next 1, 2, 3, 4 months, depending on how quick this wants to go up. I mean, gold is starting to go parabolic. These are some pretty big bars, and we really just started April. So we're not far away time-wise to hitting that target.
They are significant bars. So we're going to see potentially, you're saying we could see 2,600 plus change in the next couple of months if this move continues, and then we might see a correction, and that correction might be back down to that 2250, 2260 level
Yeah.
before we see something then longer term. And your longer term, you're terming that over 4, 5, 6, 7 years, that type of time frame. Is that what we're talking about there?
Yeah, so like we saw the stock market, bottom back in kind of more or less or gold in early mid 2008. I mean, it rallied all the way to 2012. So we'd be probably looking at a 3 to 5 year rally from gold. Say potentially late next year, if the market corrects, gold pulls back. I think we have a multi-year, 3, 5 year rally in gold that will be obviously one everybody's going to want to be part of. So it's pretty exciting.
And we just stick with gold at the moment. We talk about gold miners. How do the miners stack up in this scenario then? Because they have lagged the gold price significantly. I mean, if we look at when back in the early teens, when gold miners were significantly higher than they are now, despite the fact
Yeah.
that the gold price was significantly lower. Now we've got a
Mhm.
new all-time high in gold, but gold miners are significantly lagging that.
Yeah, there hasn't been I think really crypto has taken over a lot of money from the space, but no one's interested in the precious metal space other than people like us who kind of live and breathe it. We understand the potential. We're always looking and watching it. But the general public, nobody really has exposure to gold. The general portfolio has like no gold. They're not interested in miners, or they might be, but they own them from like 10 years ago and they're like
Mhm.
down 50% or 80% on their miners. And they're just like, I'll leave them. I don't need to buy anymore. So they're out of favor right now, which is a good thing because it means there's lots of upside potential when they start to move, and they are starting to come to life. They have built this kind of launch pad. They built this rounding formation, and then it busted through there. And now it's flagging down, and I believe we're going to see a very nice run up in the gold miners. But
We're
there's
close
not a
to a
lot of interest
breakout
in.
there on that, aren't we? Just in that
Yeah, I
downward
mean
trend
it's
line from
threatening.
2020.
Yep, I think there's a lot of potential. It's trying to break out of this short-term falling trend line, but there's a lot of more costs with getting gold out of the ground now. The fuel, labor is an absolute killer. Machine, everything is so expensive. Inflation just whacked everything. So it used to be maybe $1,000 depending on the place to get it out of the ground. Now it's like 1,400. So
Mm.
that's one of the big problems is the cost has gone up so much. You'd think these, the miners just don't make as much as they did. Even if they're mining more, they're making less. So it's just because of the costs and
But
all
with
that.
but with this move up now in the gold price, we're saying that there is some opportunity in these miners now after all.
Yeah, I believe the miners could potentially have a pretty decent rally, maybe right back up to these highs around. This is GDX, so around $45, which is, I mean, it's a significant move. There's potential for it to run, I would say, 17 to 30%. That's a pretty decent run, and that's typical for the miners. They move literally 15 to 30% up and down all the time. So if we get this bid and people keep buying and bidding the market up over the next couple of months, and they become favorable or stay favorable, we're going to see a good move in the space.
Yeah, switching our attention for the moment just to silver. Silver has been lagging gold, but it seems to have just come to life a bit now in the last couple of days.
Yeah, silver's got an interesting chart pattern, and as we know, it can have these like ballistic moves to the upside. And believe it or not, this big pattern here where it sold off and then it flagged sideways, built a launch pad, and took off. You could almost argue that is,
Been
it's
replicated
there
there,
could
isn't
be
it?
something that is forming right now. We got the sell off. It's building a launch pad, and I don't know if silver, maybe silver does just go absolutely ballistic and take off. I kind of have an upside. I do have an upside target, just like gold, 2,700. I think silver could actually run to about $36 an ounce, which brings us right to this like critical pivot line on the chart where it broke up, it came down, found support, bounced, broke below it, hit its head, hit its head, hit its head. So that line across this chart is
Significant.
$36, but it's also a Fibonacci extension. When we look at this overall rally and the pullback, the momentum from this pattern right here actually points to 36 as well. So when things really come together like that the momentum of the previous move shows 36 as the target, 36 happens to be major turning point on the chart where there's resistance. That's a really good sign that we're probably going to see something, price get there.
Yeah. And we look like we're just about to break out there on the monthly.
Yeah,
We've got a
it's
fair bit
I
of
mean, we
resistance
definitely,
here, but a close above 28 on the monthly, which is where we are now on the spot price,
yeah,
would be significant then for us as well. Yeah.
yeah, it's exciting for sure. Now, one other thing I was mentioning to you before we were on camera is if we take a look at some stages here or cycles in the market. So I like to follow the stock market cycle and the economic cycle. And the way this works from a high level, there's two cycles. The blue one here is the stock market cycle. Now it will
Mm,
top out before the yellow cycle, which is the economy.
mm,
Economy needs like two bad GDP numbers. Each one takes 3 months to get. So the stock market generally tops out months and months before the economy does. But what's interesting is when we get to late stages to a cycle top in the stock market, we see precious metals and miners come to life. We see energy and energy stocks come to life. And then we see industrial capital goods come to life, like factory assembly lines, machines, equipment. People are expanding their businesses. And when all these things come to life, to me, that is like a big orange or red flag saying, okay, we are on like one last push up here. And then I think we're going to have a major stock market reset. We're going to have a financial, economic reset. And we can see all of these things happening. And unfortunately, the people for the industrial capital goods, they're the ones who, the factories and the CEOs are going to get really hurt. So here's, let me just go to the daily chart. This is the industrial sector. And as you can see, it has had a huge move, pushing to new highs. And this is just because I think a lot of people in business don't understand the stock market cycle. They don't understand really more so the economic cycle.
mm,
They've
mm.
had a killer run. Most businesses are doing very, very well after COVID, and they keep expanding and they're spending money on equipment. And these industrial companies have killer sales. I mean, people are upgrading and upgrading, but the businesses themselves who are doing the upgrading don't realize like we're at the end of this life cycle. And although they just upgrade to keep up with demand, the demand is about to be probably cut in half, and they'll be wishing they just had their old assembly lines that were already paid for back. So, I mean, this is the problem with, of not knowing all the business cycles when you own a business. But when all these things are moving together, and we have seen this before, we've seen the industrials continue to rally and move higher with gold, with silver, and miners, and the energy stocks, while the stock market starts to top and fall. And the stock market can fall quite a bit while these other assets continue to move up. And crude oil is the same. We've got crude oil. It's put in a rounding bottom. It has broken out and started to rally. And the energy stocks are on fire. They are just screaming to the upside. So with all these things coming together, this is signature. As we saw this in 2008. We've seen it in previous market tops. It's exciting, but it also means the music's about to stop, and most people are going to get hurt because they don't understand what you and I are talking about here today, or how to avoid it, or how to benefit from it, even more so importantly.
It just look back there to that oil chart and give us your view on
Which
where we're
chart?
going, like the oil chart.
Sure.
This
Yeah.
is
So if we take a look at oil, it's put in this kind of rounding bottom formation, which is a very strong sign. It's consolidated through here, trying to eat through these highs, and finally it's popped and broken out. And I think we're going to see oil obviously work its way higher. I think it's got potential up to the 90. Maybe even it's going to come right back up to these other highs, the low 90s. We got lots of stuff going on. I'm hearing, I don't follow the news, but I was watching a YouTube video, kind of sucked me in. The doom and gloom stuff sucks you in sometimes. And they're talking about how he was going on with biblical stuff, that it says like there's this massive war coming and all this stuff. And in my head, I'm like, okay, well, we already have wars going on, but if things really get amplified, oil always goes through the roof. War is just high oil prices, high gold prices. So we're in this, like, as much as I hate war, we're in a perfect storm for gold and oil to do very well. And they've come to life. And I think this is really just the start. I think we still have some pretty good upside in all of these spaces, to be honest.
Indeed, and oil, not just from a fuel point of view, but I mean it makes everything ultimately.
Yeah,
It's involved in every
exactly.
aspect of in the industrial process.
Yeah.
So we'll have a significant higher oil prices are going to have a significant impact on inflation figures as well. So as we see oil ticking up, we're going to see inflation ticking up, and that has its own implications for
For
stock market
sure.
and for precious metals. Before we wrap up, Chris, give us the URL again. Where can we find you?
Yeah, they can find me if you're into gold and oil. I have thegoldendoilguy.com. That's what I've been running since 2008. So if you want to be active in those, we're trading those and doing very well. But my long-term investing signals for investors with larger capital who want to just consistently grow their capital, that's the technicaltraders.com.
Thetechnicaltraders.com. It's on the wall there behind you. The Golden Oil
Yeah.
Guy as well. Chris Vermeulen, thanks for joining us on the channel today.
Thanks, Dave. Take care.